Welcome everyone. My name is Eric Miller. I'm the Godzilla of personal finance for practice owners. And this is
Also Eric Gersh.
just Eric.
Just Eric.
We just
a
call him
dude.
Eric. Yeah, he's just a dude. Okay. So welcome. We're going to talk today about a subject that I know a lot of people seem to always have like a comment on or a question on, especially when it comes to like April 15th, which is taxes. So, all right, look, when it comes to taxes, we get a lot of questions about like how to minimize my taxes. Yep. I pay too much. What are some other things that we hear all the time?
What else should I be doing?
What else should I be doing? And there's all this, and it kind of surprises me because most people that work with an accountant, a lot of these questions should be directed towards them.
Yep.
Right? But they get directed towards us.
Yep.
Okay, as financial advisors. We're not licensed CPAs.
No.
Right? I'm not a bookkeeper.
No.
Okay? So it's funny to me, like all these questions get asked to us, and that means that there's a problem.
Yeah.
People think they pay too much in taxes.
And they usually do.
And they usually do. And, we start digging around a little bit because we're kind of curious, right? And then we start asking, like, what are some of the recommendations that you get from your accountant? Right?
Yeah. And usually it's pretty basic recommendations.
And that's a pretty big problem in and of itself, right? Because when we start seeing patterns develop, because we see, we have over 200 clients, and then we start seeing like the same things are being said over and over again, right?
Oh yeah.
That's a problem.
Yeah.
So what we see mostly from accountants, as far as what they're telling their clients to do to minimize their tax liability, it kind of boils down to this. Either throw all your money in a qualified plan, right? Buy equipment.
Yep.
Right?
That's a big one.
Or spend money on stuff that may or may not be a good investment just to minimize your taxes.
Spend $1 to save 30 cents.
Spend $1, save 30 cents. Okay. Okay, let's talk with the first one. Load up all your money in a qualified plan. What the hell's wrong with that?
Well, for most private practice professionals, you can put what? $19,000 in a 401k, $6,000 in an IRA. It's not that it's inherently a bad thing, but it's only taken, care of a very small percentage of a lot of clients' income.
Exactly. So if you have $1 million practice and you're supposed to be taking, 70, 100 grand and chunking that away, you can only put so much in the 401k.
Yeah, you still have $75,000 at least that you have to find a home for.
Yeah, exactly. So, but my contention is it's kind of lazy, right?
Yeah.
It's lazy tax planning because it's like, well, there's nothing there. Oh, we have this 401k, so why don't we have you create a 401k or a qualified plan that's going to cost you, it's going to put you on the hook liability-wise, right? And it's your responsibility to make sure that it's a good plan and it's run right.
Yep.
Okay? That doesn't seem like to be a good solution for a lot of practice owners. Tell
No.
me why I'm wrong on that one.
No, I don't think you're wrong. I think the other thing you got to take into consideration is, okay, I put all my money into this tax deferred plan. It grows year over year. And now I get down the road in retirement and I got to pay taxes on the whole thing, including all the gains. So it's a gamble.
Right.
What are tax rates going to be in 20, 30, 35 years? That whole strategy banks on put your money away today while you're in a higher tax bracket, let it grow, and then pull it out when you're in a lower tax bracket. But number one, I don't think anybody should aim to be in a lower tax bracket in retirement. And number two, I don't see anywhere for taxes to go but up
It's
in
cookie
the future. Yeah.
It's cookie cutter financial advice. It's not for practice owners. It's definitely for rank and file. It's not for a practice owner.
Yeah.
Somebody that wants to build multiple practices, own real estate, have multiple income streams, not live on $5,000 or $10,000 a year and just Social Security. I think that's a losing mistake.
Totally.
Right, to do something like that. Okay, good. So I think we agree on that.
Yeah.
from a tax strategy. So when you start looking at why accountants right? Why they seem to recommend the same things over and over again? Why do you think that is?
Well, I actually have a degree in accounting, so I have an educational background in it. And I can tell you this, when I was going through school, I didn't get one single class on reducing taxes. They teach you about...
Really?
Yeah, honest to God. Teach you about depreciation, they teach you about how to, calculate alternative minimum tax on a calculator, which you never even need to do, but nothing. Zero education on reducing taxes.
Wow.
Yeah.
So really, when you look at it, they are simply there to make sure that the person files their taxes on time, and they do it correctly.
Exactly.
And they do it in a compliant manner.
Yep.
Right? So there's no way you can expect, because the last time I checked, there was like 3 million words to the tax code, right? How the hell can you expect someone to know every single passage of a tax code like that?
You can't.
You can't,
Yeah.
okay? So this is why when we look at like the people that are in, a certain income level and wealth level, their effective tax rates are much, much less.
Yep.
Because what they end up doing, as far as I can tell, is that they are willing not only to pay for a tax strategist to give them different alternatives, right, that their accountants may or may not, understand or even know about, right?
Yes.
Or worse yet, they tell them that if you do this, it's a red flag, right? Give me an example of something like that you've seen.
Home office is a big one.
Yep,
Conservation easements is another one.
yep.
Pretty much everything that's not buy equipment or put it in a qualified plan, I've heard somebody at some point call it a red flag.
Yeah, let's take the conservation easement real quick because I know it's kind of an advanced tax strategy, and I guess to explain it like really, really quickly, like what's a conservation easement?
It's pretty complex, but I'll try to make this like a 30-second elevator speech. You're basically investing in a real estate development partnership, all right, where instead of actually developing the land, you're donating the rights to the land to a charitable land trust, And when you do that, you get to take a deduction not for the raw value of the land, but for the value of the development rights that you gave up. So all said and done, you end up getting a multiple on the amount of money that you actually put into the project deduction-wise.
And if I'm a practice owner, right, and I need to minimize my taxes, and I decide to do a conservation easement, the reason I'm doing it is multiple reasons. Number one, I kind of like the idea that I'm going to be part of something that's going to conserve land,
Yep.
right, and I'm going to also get a charitable deduction for that, right?
Yeah.
Okay. So what's wrong with that?
Nothing.
Okay. So why all the why is it when we start looking at this advanced stuff, why is it that it just gets ripped apart and just attacked? Why is that?
Well, I think number one, just like any industry, you're going to have some people out there that are trying to take advantage of it,
Yep.
right? When you're appraising what could be, somebody at some point is going to take advantage of it, so there's that. Number two, you got, just like you said, accounts don't understand it to begin with. And, I think when you put those two things together, that's probably 90% of the objections that we see on it.
So, like anything, these advanced tax strategies, because they're written in the tax code, right? It's not like we make this stuff up, you know? They're like written in the tax code, and as long as you do them correctly, by the book, by the law, right, then you can expect that you'll have a favorable result.
Yeah.
Even if you got audited, right? Like, is there a concern about, should you worry about getting audited? I don't have a huge concern about getting audited because I feel like, we do things correctly, right?
Yeah.
And I think the good record keeping, good compliance, those kinds of things are certainly part and parcel of minimizing your taxes.
Totally. I mean, as long as you're doing a legitimate strategy, you can document it, you fill out the proper forms,
Yep.
and you're not just lying about it. I don't know what people are really all that worried about.
Yeah, here's the deal.
Yeah.
Your responsibility is to minimize your taxes, right?
Yeah.
It's like, I've never written anywhere where it says that I have to like max fund the IRS. I say that all the time, right?
Yeah.
But you cannot be passive in this role because most people's accountants are passive. They're reactionary, right? So we talk a lot about you have to be active on this. You have to have a tax strategist, right? That that utilizes certain advanced tax strategies, okay? You gotta be willing to document these kinds of things, okay? And how do you get over like accountants that push back? Like how do you like, because they're gonna know just a little bit more than you are, right?
Yeah.
So like how do you get over that objection?
I mean, it's really a case by case basis. I do everything. I mean, one of the most common ones is just sending them the section of the tax code that explains whatever, answers whatever question they have. That tends to work because once they read it themselves, they're like, oh, okay, guess this guy does know something.
Yeah.
And other than that, I mean, it's just having a conversation with them,
Yeah.
largely.
Yeah, because it's not gonna happen by itself.
No.
Right? You have to be willing to look, this is your biggest expense.
Yeah.
By far, right? So you are going to have to, there's gotta be, and when you get a return like that, like anything else, like any other investment, when there's a return that you can expect, it goes with some risk, right?
Yeah.
And I think the risk is simply that you're trying to use a complex tax code, because it is complex.
Oh,
right?
certainly.
Yeah, I mean, there is certainly black and white, and then there's gray, okay? And your willingness to like, okay, you know what, I'm kind of willing on this one. There's a return, right, that you would get for, using that kind of strategy. But you got to be willing to accept that.
Yeah.
Yeah.
Yeah. No, I agree. I mean, I think part of the issue though is no one thinks about, okay, what else is my risk? Giving up this money that I'm not getting to keep, and
Yeah.
what I could use this money for.
That's where people don't realize
opportunity
that.
cost.
Because you start looking at number one, inflation. You start looking at debt, interest on debt, all the expenses that go up every single year,
Yeah.
and the relief. You've seen it before, right?
Oh, yeah.
Like when we save people like 30, 40, 50, 60,000 in taxes, like the relief that they actually feel. They feel bad at first because they're like, is this okay, right?
Yeah.
I used to take this 50,000 and I used to have to give it to the government, right? And now I see it sitting in my account right now, and it almost kind of freaks them out a little bit,
Yeah.
because it's like, no, this is legitimate, It's totally legitimate. And
This is your money.
you deserve
worked
it
for it.
Exactly. Like you deserve it. Like they'll feel bad about it, right? That doesn't mean you should go blow it on, something that's useless, but
No.
but at the end of the day, it's like that's the return that you get. It's
Yeah.
that feeling that you took control of your expenses.
I mean, at the end of the day, the way I look at it, we're all going to pay taxes.
Yeah.
Okay, that's part of probably living in a civilized society. But why wouldn't you want to pay the minimum that you legally have to?
Yeah.
That's all we're trying to do.
Yeah, that's it. It's as simple as that. Just make sure that you do it within the spirit of the law, right? And I don't see any reason why I have to overpay something that I'm not constitutionally mandated to do, So I like that idea. Okay. So any other advanced tax strategies that we have that we are certainly going to let the public know? We do some capital gains
Yes.
strategies.
Yep.
What else do we do?
We have like you said, the 30-year capital gain deferral strategy, which for most of our clients is going to be a fit when they sell their practice or possibly a commercial property. And then we also have cost segregation, which just works around rearranging the depreciation on a commercial property in a more realistic manner where the client is able to take a higher level of depreciation in the early years.
Yep. And then we also have something for people that are really innovative. They can maybe qualify for what's called a research and development tax credit.
Yep.
Which is a study that can be done if you're like good at creating or inventing something that's going to improve
Processes
in business.
anything.
You can certainly take advantage of that, and all these things. It's not a big investment to like find out whether or not you qualify for it.
No,
Right? It just
it's
takes
not going to cost you anything.
Yeah, it just takes a little bit of time. Maybe fill out an intake sheet, and you can get an idea of how much that would save you in taxes. I think people are throwing away hundreds of thousands of dollars by just kind of thinking that, well, if I engage with these tax strategists, I'm going to have to shell out like $15,000 or $20,000 right away. That's not the case, is it?
No, you're going to find out approximately what you're going to save up front without putting any money into it.
That's amazing.
Yeah.
Right. That's like,
It's a no-brainer.
that's a no-brainer, okay. Well, good, well, I think that's what we're gonna talk about today, taxes between two Erics. Nice job, dude. That was actually kind of fun.
It was. Hey guys, thanks for watching this week's episode of Between Two Erics. If you want to learn more about what we do, check out our website, Econologics.com. And if you want to find out more specifically about the advanced tax strategies that we had on today, please check out AdvancedTaxSavings.com.